Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Isreal, Joel Elconin, Dennis Dick. Dennis is here. He just had to reboot his comp, so he'll be on in a second, we hope. It is a quad witch / S&P rebalance Friday. Also, happy March Madness to everybody, all the college basketball fans out there. We got a good show for you today. We got Markus Heitkoetter, 8:35 or 8:30, somewhere in that range. Jason Raznick at 8:45 or somewhere in that range. We got some earnings from FedEx and Nike. There's some NFT stocks doing weird things this morning. And same story, really, as the last few days. There's this tug of war, right? This tug of war between bond yields and high PE multiple stocks. And the bond yields are winning right now. We gave back those gains. I'll bring Joel on now, and Joel will tell us exactly how we gave back those gains yesterday from the Fed rally on Wednesday. Joel, good morning.
Yeah, nice, interesting day yesterday. Good morning, Spencers. Good morning, traders, investors here on this March 19th quad witch. Had to sell off yesterday into the close. They tested that level overnight and it held. So 3,900. Get your blotter out and boom, 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 right down 3,900. That's major level. That is the low for the week overnight. Thursday's low. That's the key to this market. Returning to the all-time closing high made earlier in the week at 58.25. Crude down 29 cents at 59.77. Just got shellacked yesterday, giving back a couple weeks worth of gains here. Now under $60. Gold, that's up $8 at 17.40.50, inching its way towards 1,800. Silver, that's down 6.6 cents at 26.28. And Bitcoin trying to get up there, traded at the high of the futures session. That's up $1,835 and 59,200. Good morning, everybody. Hi. What's up, Spencer? What's up?
Joel, let's just start with like the sell-off from yesterday, and let's go like into individual sectors here. Let's start with the banks. All right, the banks were getting punished on Wednesday after the Fed meeting, and walk us through the price action in like the XLF.
You got to be scratching your head on these banks here.
Yeah,
and the reason I'm saying that is that was one hell of a move. That was that the move? Was that the short-term high? JP Morgan got up over 160, reversed course. Let's see, how high did JP Morgan get in the session? Boom, JP Morgan got to 161.69, made a new all-time closing high. Well, I keep an eye on that today, folks. 157.65. That was the all-time closing high. See if anybody wants out at the mark. Below 157, look out below. Let's see, that would be Wednesday's low at 153. Bank America sniffed $40. There must have been $1 trillion for sale there at 40. Hit 39.97. That ended up closing under 39 at 38.94. So big moves, new highs, not quite reversals on any of this stuff, but you have to be wondering on the next bump up if you're going to be finding sellers there in the bank stocks. Like I said, Bank of America getting near 40. I don't even know when the last time that's happened. I think you got to go back to the financial crisis here. Let me go back.
Quit being so dramatic. Is it really?
Yes.
Oh, man, you're right.
Yeah. Look at that. What was the high? Bank America, the high. Look at this. Boy, we're going back a long time. So, I mean, it's had a nice move off its low. 39.50. March of 2008. and that was it. That's the closest we've been to $40. So there's your hurdle. 40. We were over 40 in May of 2008 when we had 40.65, but probably going to be too far away in the book for Dennis to take a look at. But man, there is got to be $1 trillion to sell at 40 in Bank America.
All right. Speaking of Dennis, let's bring on our first guest of the day, Dennis Dick. Good morning, sir.
I was having technical problems there. StreamYard didn't like my camera, didn't like my mic, so rebooted the computer. Haven't rebooted the computer in a long time. Took like 10 minutes to reboot it. So I am here now. I'm with you guys on this quadruple witch. What's going on?
How you looking there, Triple D? I mean, rough.
Yeah, I'm feeling rough. I need more sleep, man. I need a vacation. How do you get a vacation?
Well, it's a little harder in Canada since they don't let you leave your house. But
well, I think we're actually in the gray, so I think we can do some stuff now. But yeah, I mean, we don't have any vaccinations, so that's why we're allowed to leave. They decided, we'll just stay in lockdown. We don't need vaccinations.
Well, I saw Biden's authorized us to give you guys in Mexico some vaccines.
Okay, thank you. We need that, Biden.
Yeah, you're welcome.
We're like last. If you look at the list of countries that are vaccinated, Canada's like last. Like 2% of the population is a joke.
Oh.
So I don't know what they're doing. Anyways,
all right, smash the like button for Dennis.
That's out of my wheelhouse.
Yeah.
So, Dennis, one of your worst fears hit the tape yesterday afternoon. Some people are attributing the move down in the S&Ps to that news. How you reacted to it?
What news?
Tell him, Spencer.
About?
Go ahead.
What's the news?
Tell him.
Wait, I'm supposed to magically read Joel's mind.
What hit the tape around 1 o'clock yesterday? Spencer.
Dude, Joel, you have to remember, I'm
Spencer.
I know
like
France went into a lockdown. I know oil went down. I don't know what Joel.
Wait,
what happened here? I don't know if it's a joke or if it's not a joke.
No.
Thank you. Transaction tax. Thank you, guys. Sorry.
What are they saying about it?
I was up late last night. I was at.
Oh yeah.
No, I swear, I was at the bar with Luke and Bert and people till like way past my bedtime.
What time?
Well, like for me, like 11:30, which is super
what bar?
Somewhere around us. Dennis, you've been fretting about the transaction tax, and there was a report yesterday that the senator from Hawaii, I believe, is going to introduce that on the floor of the Senate. I want to say Senate today, and that hit the tape at around 12:30, 12:45.
Well, we knew that's been coming. I mean, there's no doubt that it's going to get introduced. It's just a matter of whether it's going to get passed or not. So I don't know. I'm scared about it. Obviously, I've been scared about it for a long time. It's going to have its best shot that it's ever had, but I would hope that, smarter heads prevail here and they realize it can destroy liquidity. I mean, we've went into this so many times on the show. You know which side I stand on, and I think it really messes the markets up. So, and obviously, I also believe there'll be an exemption for Citadel, Virtue, and all your high-frequency trading firms. So basically, just be Main Street paying it. So they won't pitch it that way, but that's the way it'll end up. So I wouldn't be in the backyard cheering for this thing. It's only going to hurt your bottom line. So hopefully not the case. Hopefully they'll be smart about it and not try to mess with the markets and not try to make the little guy just pay and bring back basically full size commissions.
All right, so let's talk about the sell-off yesterday. Boy, I'm thinking about, you showed me that level in the Qs yesterday, and I don't know. I didn't pull the Qs up intraday, but how high did they? It was 325 that we were talking about, right?
2 days ago, yeah.
Yeah.
When we put the double top in, yesterday they pulled the rug out from underneath the whole market. I mean, it wasn't even the whole market, not till the afternoon when they really started hammering oil, and then it started to become the whole market yesterday. I don't know. Like, we're really at the crossroads here. I mean, tech growth is definitely now in a downtrend, many stocks in a full bear market, but value is still right up there. The SPY keeps holding on. We had a little sell-off yesterday because they started hitting some of the value names too, but it always seems like something picking up the slack. I mean, the bank still closed green despite coming off the highs. Oil was really the story. I mean, that really got hammered. A lot of the oil stocks were just so overbought. There's still rotation keeping this market up, so it's hard to just go full bearish here and say, okay, now it's time to raise cash, because we know this market can turn on a dime. even with the growth names, it's hard not to just come in and buy the dip because it's been rewarded so many times. So I say again, which I keep saying, it's about your portfolio allocation right now. What do you look like? Because nobody knows which way this is going.
Tech just won't rally.
I'm trying to talk here, and I'm trying to talk. You guys are quiet, man.
I'm here.
Come on.
I'm here. I'm sorry.
Okay.
No, so it's a good point, though. It wasn't, I mean, oil, sure, was also overdone, but I mean, I guess you could argue most things. I mean, the banks too, right? Which we just talked about. It was kind of the same story there. I mean, everything that was in favor, that value kind of came off yesterday.
A little bit. It started to come off, but maybe really when you put it in perspective, these banks still made new highs yesterday. So it's hard to get full on bearish when stocks are making new all-time highs on them. So I'm mixed. I don't. This is the market that I don't have any feel for right now. And then we have a quad witch today. So this is going to be like information central for us. What are they going to do on this quad witch expiration? Are they gonna, and it's mostly at the close, like what's gonna happen all day? Where are we gonna lean? We know quad which can be turning days. Do they turn around, maybe sell it off and then maybe buy the hell out of it in the afternoon? We don't know. So all you can do is stay in your stocks, like rotate around, make sure your allocations are okay, stay diversified. I know people like to just put all their eggs in one basket. It's just not the way to go about it in this market anyways. But I think you got to get the information of today, Joel. Like you've been talking about.
We were going. I said that 2 days ago.
Yeah.
I'm trying to. I was hoping for a little bigger pop today. After like one of those 40, 50 handle rippers. Then I would have been it just would have been like a much easier fade, right? Just get all those losses back. Now you're at the point, I mean, you've only had a 20-some point range overnight. There's really not much resistance here. So they could open this thing and just not immediately roll over. Jam it, until maybe 12, jam it up most of the day. And then pull the rug out on it. I mean, I'm so set in my levels. There's 3,900. That was a low a couple weeks ago in the SPOOs. We hit it yesterday. We hit it overnight. I mean, that is the clear line in the sand. I will get full-blown bearish if we take that out on a closing basis. And then I look at that high that we made. Believe it or not, yesterday, folks, we made a high at 78.50. That's a long ways away. That was the overnight high. It wasn't the intraday high. And then the intraday high was also really interesting too, because your all-time closing high was 58.50 and it got to 58.75. So 3 highs on the dailies up there. Your all-time close, well, actually, the all-time closing high is from the day before, 64.25. There's a pound of resistance up there. And we're on major support. Now, this market just hasn't given in to the support. It hasn't given in on the weekly levels. So that's what I'm looking at today. You can chop around from 3,900 to 3,950, but there are turns at expirations. And this has the one of the last 4 or 5 expirations, just going back to March. This one has the most bearish overtones that I could see. Now, one day, they come in and rip this and close it at 39.50, 25 points off the high. Turning point, and that's what I'm looking for.
I also thought the timing, particularly of yesterday's sell-off, was very interesting in light of the fact that a lot of the stimmy checks are finally hitting, and there was all those surveys done. I think Bank of America, they won 35% of millionaires are going to throw their stimmy check into the market. Well, 3/4 of the S&P 500 was down yesterday. So if you bought in yesterday,
didn't get in there right away.
It's gone. It's gone. Basically, I was thinking of that line from South Park where and it's gone.
And it's gone. And we'll just invest in here and it's gone.
It's gone. It's gone.
It's gone. It's gone.
So the timing, awesome. Stimmy checks are hitting. How much that's going into the market?
Yeah,
nobody can say. But I just thought there was an interesting confluence of events there between stimmy checks finally hitting.
Is that really going to move the market?
No, not going to move the market. I'm just saying it's an interesting confluence of events. Here's an interesting note from Bernstein. and we've been talking about this exact thing for the last few days. They noted that there is a significant overlap emerging between deep value stocks and momentum stocks. There are a number of autos, banks, materials, and energy. This is before today or before yesterday. That are screening as both value and momentum. Whether that trend whether it just took a day off or what,
crowded.
Yeah.
It's been crowded for a while. Money's been flying in all these names for a long time. We've been talking General Motors on this show for 4 months.
Yeah.
So it makes a new high yesterday. It kind of feels like a little bit like it closed weak.
Yep.
So, if we get up, and we have a crazy trading day today, that 62.24 looks tough. I mean, 60 could be tough now too.
Yeah,
it looks like it's kind of in the middle of that looks like a blow off top a little bit. Talking against my book, I'm long GM, and I've got puts sold as well, so kind of double long it. Still like the story going forward, just short term, it's overbought, and that kind of looked like, even in all the value names, kind of looked like a little bit of a blow off top yesterday. So that's why I'm just cautious, man. I think you gotta just be cautious. You need some cash. If you don't have cash, you need to be having some cash just in case this starts to get ugly. And I don't know how ugly it can get, but there's a lot of things to worry about. You gotta, the bubbles you have are just incredible when you think about it. You got a housing bubble.
Oh, we've got a new bubble. We got an NFT bubble. Just put it.
I don't even know if the NFTs have got started. That's so early. But
no,
NFT stocks.
I'm not talking about the actual. I'm talking about.
Yeah,
stocks.
Give us that list again. So we'll go through it.
Just real quick before we move on from the GM, what do you think about the 60 grind today? Right? Well, I don't know what the open interest is out there.
Probably. Pin it.
Yeah, that's going to be a tough one. I don't know. I don't see this ripping back up over 62, and I don't see it, plunging down to 58. I think you're just going to grind. You're seeing it a little bit in the after hours in the pre-market, but those puts and calls, straddle, whatever you got there, strangle, they're just going to be battling it just to make all those options expire as close to worthless as possible.
I mean, I came in this morning. I did the same thing I always do, which is I look at my Benzinga Pro Movers tool, and what is on top is a stock I've never heard of, ZK International, ZKIN, and they had a PR. They had a PR out on Monday that they had entered the NFT market. That was on Monday. This is a Chinese company. I have no idea what they do. I went to their website. I looked at it for 2 seconds, and I left. But all these stocks now. I mean,
what's the list? Give me the list. I'm writing it down.
Oh my gosh. Okay. I have to go find it now.
I have a few myself. Like there's, that we're just grabbing from Twitter. I think they're all the same stock. So like, you look what this WKEY. I don't have any of these. You look at this WKEY from yesterday. It goes from $8 to like 15, doubles in one day. JFIN was another one. Goes yesterday from $5 to $13. It's blockchain all over again. I mean. When we're all excited every time somebody says, "Oh, something about blockchain," they're buying all these stocks.
I found that list. TKAT was the big one, but then there were a few more. Oriental Culture, OCG, Ideanomics was being mentioned. Again, these are just stocks that are being mentioned as.
What's the symbol on that one?
IDEX.
IDEX.
Yeah, you've got GRNQ. Again, don't even know if
GRNQ is more of a crypto play.
What's the difference?
A big difference. Some of the crypto stocks, I think it's a big difference because some of the crypto stocks have all topped out. So where these new NFT stocks, obviously it's all related, but some of these crypto stocks that we were talking about a month ago all topped out. Yeah,
YVR was the big one the chat's mentioning. You had TAOP was mentioned, CNET was mentioned.
Yeah. Is Christie's still a stock?
Is what?
Christie's Southeast auction?
Yeah. I think.
No, I don't think
it went off the board, right?
I think it might be OGC. I'm not quite sure.
I think it went off the board.
Yeah, it's possible. It's possible. But yeah, I mean, every day now there's a new one.
Sino, SINO. They were saying a lot of these ripped. A lot of these ripped yesterday though, and sold off significantly too. I mean, this TKAT has just been insane. It was $2 a week ago and got to over $40 yesterday. So this is what people want to talk about. I mean, we know that they want to get rich fast. Nobody wants to get rich slow. They don't want to read the Kramer book, Get Rich Slow. They want to read the book, Get Rich Fast. You're not going to learn on this show, I tell you, man. I'm not teaching people how to get rich fast.
You've got Elon Musk making fun of the NFT things. He tweeted about it last night.
Next thing you know, he'll buy some of these NFTs.
Yeah, probably.
Swade. He starts out making fun of them, and then he's like, "Oh yeah, I own Doggy Coin."
Yeah.
Just a circus show in his head sometimes. I'll tell you that much.
I do want to give thanks to GWS for pointing out. Chris Kachi actually called out ZKIN on SPAX Attack a couple weeks ago. Thanks for the reminder, GWS.
Oh, good stuff. That one's ripping this morning.
Props to Chris, but I mean, yeah, it's just silliness.
He also likes Funko. Chris likes Funko. As a more this isn't a smaller play, but just he thinks this could be one of the bigger, like, not that's a big NFT play, but it's a real company.
Yeah.
So some of these, like, you don't even know what the hell these things do. If it's just headlines, they're not really doing much at all.
Sell them on the way up, buy them on the way down. Sell it when you don't want to sell it. You just do it. That's the only way, because when they turn, they turn. Oh,
they turn. You're right. You got to sell while the peanuts, the circus is in town, because if you don't usually get a second chance on this stuff. So they start doubling and tripling. I mean, if I was in one of these, I'd be out way too early. You know me, like TKAT, I'd be like $2 to $6. Like, whoa, big money, no whammies. And boom, $40. Like I never get to participate in those because I scalp out too quickly. Diamond hands not here. But anyways, it's not for me. I mean, This is just, speculative capital only. If you're taking all your money, you're dumping in an NFT play, you're asking to lose a lot of money. Yes, you're going to hear about everybody who made the money. You'll hear crickets from the people who lost. You won't hear anybody on Twitter that bought TKAT at $40. They won't say it. People can't talk about their losers. They're too embarrassed. I talk about my losers all the time. I mean, that's why we try to talk. This is real trading here. Like losers are part of the game. I probably lose on, I don't know, probably 30-40%. I've never analyzed it, but I'm sure I lose on 30-40% of my trades. I have lots of red and lots of green overnight here. It's just a matter of being, right more than you're wrong, or at least making more on your winners than you do on your losers. But people don't want to talk like that. They want to just, say, oh yeah, I made millions of dollars in TKAT, and you're all idiots for not buying it. That's what they talk about on Twitter. It's so
there's guys in the chat that are like that. I don't know if we got rid of them yet.
No, we didn't get rid of anyone.
People like you're saying, you can do this. I don't. The difference is I don't want to do this because one, this distracts me from my consistent trading in mega caps.
Yep.
If I'm looking at this stuff, I have an opportunity cost. There's an opportunity cost. If you're sitting there, you don't know what to do, and you're learning, and you want to play around with this stuff, go for it. But I as a trader, I'm trading hundreds of stocks. I can't be watching some stupid NFT thing going, bananas. That's babysitting. There's an opportunity cost there for me. And I think it's more luck than anything. I think you could go buy a whole bunch of these things and maybe you get in it early. And, I have played these things before. And I don't say I don't play these things. But there is definitely an opportunity cost for a professional trader to be managing a portfolio of these NFT stocks moving around 50% a day. How do you manage that risk? It's really hard. So if you got in it, the buzz was there and you're doing the social arb thing, and you were looking, okay, everybody's talking about this one, it might get hot eventually. Then, that's a different story. But if you're coming in buying TKAT at $29 when I had a bar yesterday of 20 to 40, I mean, it's gambling at this point.
We mentioned this yesterday. Yeah.
Just gambling.
Yep. And we did when the show went out yesterday, I looked at this thing and I said, oh, range 20 to 40. I go, I think 30 is going to be a big number. That's the close. So people that are like bought it 2 days and they're looking at that close and trading under it. I mean, it's going to be up and all around. do I think we're going to see 40 today? No, probably won't even see that low of just under 20. But man, let's see, 30 almost in the middle. If you're long, you want to see this thing get over that close, stay over that close, go 30 and a half, 31, 32. Boom, keep on going. Another thing, then, I don't, like you, Dennis, I don't mess with these kind of stocks, but just to give an example from yesterday, when you don't know what to do in something, scale out. That's if you wanted to exit this. AOUT yesterday, outdoor brands. It didn't, when we talked about it, it didn't look like it was going to 30, right? I mean, now it's an all-time high. That actually did that on the second day of trading and collapsed. So what do? You look, let's say you're long 1,000 shares. Okay, you're not going to pick the top. Throw a couple out at 27. Hey, I got lifted at 27. Throw a little bit more size out, 27 and a half. Hey, what do you know? I got lifted at 27 and a half. Throw a little more size out there at 28. You get lifted at 28. Okay. You also would have got lifted at 28 and a half and you would have been thinking, man, those sales weren't that good. Then it comes down and ends up closing on the low of the session. Mr. Market helping with that too. So if you are trading those things, it's, just use scales, be quick. I don't know if you have it on your platform. That's really the only way, because when they turn, and it's better to go into the momentum. But
you got to sell your peanuts while the circus is in town on all these stocks. You get lucky enough to grab one of these things that goes up 100 or 200%. I ring the register. That's how I would do it. I like I said, I've tried to play some of this stuff on the side. Sometimes you win, sometimes you lose. I mean, you got to get out when the getting's good. I tried Kodak. I was trying this off of this, and that one obviously wasn't working out. I wasn't expecting that to go up, 200-300%. I just thought, there's people talking about it as a potential NFT play. It doesn't look like it is, or at least the earnings stalled that out. So I sold it. Take the small loss and get the hell out.
Please, or not please, quick advice, and then we'll do some earnings. I was talking to a buddy of mine on the phone, and a friend of his had a kid. I think he put like 10 grand into GameStop, right? 19-year-old kid.
Okay.
And at one point it was worth $250,000. And my buddy was just like, he was begging the
still
guy.
Worth a lot of money, because it never really come down that much. It went down, then went back up, unless he sold it.
Depends when he bought.
I'm not sure what he actually did with it and what the pricing was on it, but he was up like $250,000. And my buddy was like, you know what? He's 19 years old. That could change his life, and you should just make him. He's like, no, it's going to he thinks it's going to 1,000.
Could.
And
it could.
He ended up, it came back down. The kid still ended up getting 88 grand out of it. He ended up
sell it.
Good.
Yeah, so he ended up selling. But man, 19-year-old kid, you got $250,000 in your pocket. Pooh. Man, you're not going to get too many opportunities.
You're not going to hear the story, though, about the other 10 19-year-old kids that came and bought at $300 and are down money, or $400. You won't hear that story on Twitter. That's why I'm trying to, I'm not trying to say that, everybody sucks. What I'm trying to say is everybody gets this fear of missing out. This is a driver. This story is a driver for FOMO. It's a driver for FOMO. And everybody goes on Twitter to brag about themselves because they aren't confident enough in their own abilities. They have to brag to you so they feel better about their own lives. I don't need to brag to you. I feel just fine about my own life. I like complaining to you because I'm like the glass half empty guy. I've got half winners, half losers, and I'll focus on my losers and say, man, I suck. But I feel like it's kind of fun to make fun of yourself to a certain extent too. Why do I got to go on Twitter and brag? The odd time, we all do it. We all do it the odd time. But if you got to go, if you're following somebody that's just constantly bragging about how much money they're making, it's one, probably, maybe not as true as you think it is. Two, maybe it's true, but consider the market environment that we've been in as well. I mean, I go both ways. I trade market neutral. The market going up 300 or down 300 is, pretty much meaningless to me because I'm trading market neutral. I'm trying to trade strategies that make money in up markets and down markets, and you've got to adjust. And do I lean long in the bull market? Sure. Do I lean short in the bear market? Sure. But if you're just, going all in all the time, coming in, you're benefiting. If you're a long only trader, you've been benefiting from an up tape. Don't kid yourself. Don't kid yourself. So your trading abilities might not be as good when we get into a different environment. We don't know when that's going to happen, but there are periods of 5 to 7 years, 12 years, 68 to 80. You can go back from 2001 to 2009. You can go from 2000, the financial crisis, just wiping out money. There are periods where, the bears do make money. And you've got to be careful if you're not in all these high growth names, like I said, on margin, you don't want to get blown out during those periods. So you're a long-term investor, try to go with it. I've had investments for years as well. You try to go with it. If you're a trader, you got to be able to read the tape a little bit and obviously know when to lighten up. I feel like we're still in a lightening up environment here right now. I've been lightening up in my trading positions. The long-term stuff I try to hold on to.
Let's just do a couple earnings, and then we'll go to Marcus. Let's do FedEx first because that one is ripping this morning. They had earnings after the close last night. EPS beat, sales beat, guidance also beat. EPS guidance for the year. Good report.
I got a trade on, so I did just tell you I'm long FedEx, or I'm short FedEx, long UPS, and I did it 3-1. So and if you look this morning, look at these percentages, how this stuff works. 1.87% up FedEx and 5.5. It's almost perfectly on that. That's a quantitative approach to an earnings report that I know on a FedEx earnings, it'll move 2 to 3 to 1 on the UPS. So I'm paired off in it. So I'm short FedEx. So you say, oh, you're hammered on your FedEx short. No, because I went long UPS on the report. So FedEx popped $5 and I was able to buy UPS flat. So you do it 3-to-1. And, that's, just a classic pairs trade. But some newer pairs trader might just do it 1-to-1. You can't on an earnings report. So you got to have the quantitative numbers behind you because the leader moves a lot more than the laggard. UPS FedEx is tough. It sometimes is it's somewhere in between 2 to 3-to-1. So, just from my own numbers. So I did 3-to-1. It's working out. It's right on the money. I'm down, on the one, I'm down on FedEx 15 points. But, on the percentage basis, it's almost perfect. It's almost perfect at 3-to-1.
And you wait till the liquidity comes in at the open, right?
Or if I can flip out the other way, if it gets overdone. I wait till it gets overdone sometimes the other way. If it continued to blow out and it wasn't working out for whatever reason, I take losses on that kind of stuff too. Right now, it seems to be working. I already got out of half the position, and I'm just trying to work the other half. But, this is classic pairs trading, relationship-based stuff.
FedEx makes halfway back. It had a big tumble, found that major monthly support at 240, trying to get half of the move back, trading at the highs of the pre-market session. So we're pushing. So no reason to get bearish on it yet. What do you got here? You got a daily high. I try and hold out if you think the momentum's really going here. You got a high at 284.52. I mean, why not? That's $6 away. I think a lot of people after the big decline, you're this close to 280, they'll be like, oh man, if I could get out at 280, just a nice round number. There's also a gap to fill in here. I don't think we're going to get that into play today. Oh, that whole gap area, 84.52 to 86.22. Boy, to me, that would be a sweet area. The other thing, if you can't get it on strength, just keep an eye on that pre-market high. Boom. Let's say we keep going. We go up to 78.5, have a little sprint over 79, and then come back down through that open. Because you also have people that aren't long above here, but you have people that have been dipping their toe in the water. I know it's going to come back. I'm just playing into earnings. I don't care what happened after earnings. I'm selling the earnings pop. So I think, I see some two-way action. I have no idea where to buy this stock today. I can only talk to potential sellers.
All right. Let's bring on Markus Heitkoetter, founder of Rockwell Trading. Markus, good morning, sir. Oh, no. Wait, he's on mute. Markus, unmute your mic in StreamYard. Try that.
There we go.
There we go. Good morning.
Oh, rookie mistake, as if I'm here on the show for the first time. Good morning. Hey, you talked about it earlier. Everybody can brag about winning trades. It's all about also showing the losses. And
Markus, we love you for that too, because Markus will own it. I mean, you come on, you own your trades. We love you, Markus.
And today
we love having losers on like ourselves. We love it.
I mean, you guys say, I have losers all the time.
Hey Lou, if you go to the old winning channel, this guy Lou's been complaining for a couple days. Go to the old winner channel.
We have losers here, but what? Markus wins on a lot too. Let's go to Markus. Let Markus talk.
Sorry.
All right. Yeah, no worries. So, if I can share my screen here, Spencer, is that okay? And just very briefly, if you're watching me for the first time, just briefly want to explain what I like to trade. And this is the strategy called the wheel, has been around forever. And the idea here is basically to sell puts and collect premium. I just throw it on the screen here, which is great because let's just stay at step number one. And here I have DKS. It's a trade that I actually exited yesterday. So here I'm selling the 66 put. And this means that if DKS stays above 66 until expiration, I'm okay and I can keep the premium. Now, here's the deal. This works great in a market that is going up. It works great in a market that is going down. It even works great if the stock is slightly going down. Triple D, you said it. You have strategies that are for a bull market, for a bear market. Well, this here is for a bull market, a sideways market, and not really a bear market. But if the market is slightly going down, I'm okay because as you can see here, I mean, DKS could go down, like 10%, and I would still collect premium. However, I don't mind owning the stock. So step number two is If this dips below 66, I get assigned. If so, I move on to step number 3, which I'll explain in a moment. If I'm not assigned, I go back to step number 1 and collect more premium. Now, if I am getting assigned a stock, I still call against the stock and collect more premium, right? Because now I'm expecting the stock to go up. And this works great. And I mean, until it doesn't. And today we're going to talk about until it doesn't, because these are the trades, as you said, that very few people talk about. And I just want to show you, trading is risky. There's risk involved when trading. If you don't like the risk, don't trade, right? And I feel, as you said, it's very dishonest if somebody says, oh, yeah, you will win all the time, because losses are part of the business. So DKS this week was great. Expires today, strike of 66, no problem. Mara, you talked about the crypto stocks here, right? So Mara, I traded a put on a strike price at 20. It expires today. We will be just fine. A few other trades here. Lumber Liquidator, I entered into this one, strike price of 22. We'll see. This morning, Lumber Liquidator is up. I think that we have some solid support here at 22 if I'm looking at this. So it'll be okay. GDXJ, also a trade that is just fine here. But I want to talk about the trade that is in trouble. And we talked about it last week, because when I was here on the show, the news broke on Ride and actually the Hindenburg report. So the Hindenburg report a week ago, right here, let me mark this. This is where you see Ride was just getting smashed. And they reported earnings 2 days ago. And that didn't really help. And so during the earnings, it was like, yeah, well, our losses widened. And yeah, well, we actually don't really have orders because we don't have a product yet, obviously. So here I sold the strike price of 21.50, and I did this early in February. I did this on February 16th. At that point, the chart looked like this. And I thought, oh, yeah, that's a smart trade. Well, it wasn't, apparently, right? Didn't work out. So right now, I'm pretty much down big on Ride. Let me just reset my chart here really quick. So the question is, what do you do now? What do you do now when it is down that much? So here's what I did. Yesterday, I sold another put, a 13 strike price. And this helps me if I'm getting assigned today to lower my cost basis, because that's what I need to do at some point. I mean, this trade is in trouble. I need to fly a risk emission, because here's why. So this year thus far, we talked about making money, losing money. So I'm up $57,000. This is realized P&L. However, caveat, this one trade, Ride, is right now down $40,000. Now, this is unrealized P&L, and I keep saying it. Unrealized P&L has been invented by somebody who must hate traders and works for the pharmaceutical industry to sell anti-anxiety medicine or something like this, because it can give you a heart attack. But it's time to really fly a rescue mission and get out of this trade. And my plan is to get out of this trade with either a small loss or even with a profit. So the first thing that I did yesterday, as we are going down here, is I sold a 13 put. So here's what happens. And I didn't go in with the full position for a very simple reason. I want to save some money for a rescue mission. So actually what happened after I sold, so let's just say I sold a bunch of calls and puts and collected premium. Let me just move this out of the way so that we see this here. But at some point I was assigned, so I bought 4,700 shares at 21.50. So this is the challenge. Here's what I did yesterday. So yesterday I sold the 13 put, and here I sold actually half of my position size. So I sold 23 times the 13 put. If I'm getting assigned, this means that I have to buy another 2,300 shares, and I have to buy them now at $13. So this is why, if you now take the $4,700 times 21.50 plus, right? I mean, this is how you calculate your average price for the stock. It's whether you're scaling in a stock or whether you're buying the dip and buy some more when you like the stock. I mean, Kathy Woods does this all the time, right? I mean, she buys the dip. Seems to work out well for her. So anyhow, so the 2,300 times 13. So this means that my average break-even price would be 1870. Now, this is not good. It's still pretty low, but it's already getting better. So I need to have a chance that this stock makes a quick bounce. And I mean, if it doesn't, it will be bad. But I usually, even if you see it here, a stock never goes down in a straight line. It makes these quick bounces. So now it's a question, how far down can I bring down my cost basis? How much can I average it down so that a small bounce will help me? Now, here's the good news. This is just for the stocks. I did sell a bunch of premium here on Ride thus far. And as you can see here, thus far, $4,935 in premium. So I need to subtract this here as well. I'm taking the 4,935 that I already collected, divided by then I would have 7,000 shares. And I don't even know how much it is. I need a calculator. I'm not good at math. So that's good news. If you're not good at math, you don't have to be good at math. You need a calculator. Unfortunately, we have it. So 4,000 divided by 7,000. So that's another 70 cents approximately per share. So that is what I collected in premium. So it's 70 cents per share. So this means that currently my cost basis comes down to $18. Now, I'm not done with this trade just yet. And again, a cost basis of $18 is getting a little bit better. This is right here. But hey, it's better than $21.50, but I'm not out of the woods yet. But this is why I keep always some powder dry to be able to fly these kind of rescue missions. Sometimes you need them. Because if you look at this, I mean, yes, this is great. I could just tell you right now, oh my gosh, look at my account. I mean, all these trades and all of them, every single one has been a winning trade. Yeah, great. Let's talk about what? 53 winning trades. No, it's not that much. 23 winning trades or something like this. You got to also focus on the losing trade and own it and have a plan for this. And this, I think, the most important thing that I want to give the viewers here today. I mean, you gotta have a plan and follow a plan, right? I mean, whether you have a stop loss on a profit target, or as you said, you're scaling in, you're scaling out, whatever you need to do, gotta have a plan, right? And know what you're doing here. So anyhow.
I mean, that's the thing, is you've got the plan and you're looking to sell into strength. You get a little pop and you're looking to bounce out of this thing. So, I mean, this is, it's discipline. It's figuring it out. I mean, it's tough. And you outlined it perfectly. Writing puts works awesome in a bull market. It works awesome in a sideways market. It can work well in a little bit of down market. If you get a market crash, it sucks. It sucks. And you get a stock that goes straight down, it sucks. And, you got to figure out, how to, cut your losers as best you can, and you move on. But I mean, it's the market environment that we're in, where, obviously, we've been in a bull market here, and some of these strategies have worked really well, and they may continue to work well, but it's also market dependent too. So if you go and start getting into a market where it's not working as well, Marcus, how would you handle that? Do you just scale back the strategy a little bit? Let's just say
this is when I'm moving to another strategy. Right?
Let's
talk about a second strategy that I call the Power X strategy. It's based on 3 indicators. These are the indicators that you see down here. It's the RSI, MACD, and the stochastics. And this is where I would then short stocks and trade to the downside, or buy puts. So this is where I'm switching from an option seller to an option buyer, because then it makes sense. If the market has a strong direction. I mean, the challenge is, if you look at the markets right now, here's the NASDAQ, right? If you look at the NASDAQ, I mean, overall, it has a direction, and the overall direction is up, but it's not really a strong bull market. It's grinding higher. And right now, the NASDAQ, I mean, you said it earlier, the rotation is going on out of growth stocks into value stocks. So we have the Dow hitting 33,000, making new all-time highs, looking way different than the NASDAQ. And then you have the S&P 500 that is almost like the stepchild of these two, somewhere in between, trying to make it, but also more tech-heavy here with Apple and Tesla in it, definitely. So I mean, it really depends on the market condition. And you see, my kids, they're both sailors, and they always say, you can't change the wind, but you can adjust the sails. And I think that as traders, we can do this. We can't change the market, but what we can do is we can change the strategy that we are applying to market conditions.
Yes, 100%.
So philosophical.
I love Marcus. He just outlines it all. He's honest. He shows us his losers. If so many people on Twitter, they'll either show you your 50 winners, but they won't show you the couple of losers there. They say, I win on 95% of my trades. I mean, Marcus is honest. He's showing us it all. So we really appreciate, it's different strategies that work in different market environments. And I love that analogy about adjusting your sales, depending on the market conditions.
Yep.
Wait, I'm sorry if I missed it. Did we cover the Apple from last week?
You're still working on the Apple?
The Apple, yeah. And you see, this looked really, really good. So Apple was grinding higher. So I bought Apple at 133. So right now here on Apple, you see, that's not really bad. This is a $250,000 cash account. So it's $500,000 in margin, buying power here. Actually, I have portfolio margin, but I don't trade the portfolio margin. I keep the portfolio margin for these rescue missions. So I'm treating this account like a $500,000 account, even though with all the buying power, it gives me like a million
Right.
point two account, something like this. So here, I'm down $9,000. That's not a big deal. Still have not been able to sell for Apple. Let's just go there.
I thought about you
because
on
I
those
don't want to.
Apple
When you're
options.
following the strategy, you don't want to actually sell calls that are below the assigned strike price. And if you look at the next week's expiration, I only get 17 cents for the 133. And in order to make this worthwhile for me, I would like to get at least 50 cents here. So this I said it last week. It's the lazy boyfriend sitting on the couch, not making any money, right? Playing
These
Xbox,
analogies are
instead of
awesome.
getting out and getting a job here. So this is the only one that right now is not making any money, and I'm okay. Ride actually was good because until earlier this week, I have actually, if you look at the, here we go. If you look at the activity for Ride, I've been able to sell a bunch of calls. As you can see here, I sold a 23 call. I sold a 2250 call until just a few days ago, right? There was enough premium in there. Now I just got to see if it has to pop a little bit to give me some
Are
premium.
you looking for a scratch on these? Or are you looking, because you take some heat. Are you looking like to scratch? Or you're looking to turn a profit on these things? How do you define with the amount of risk that you're taking what the reward you're going to take?
Yeah, you see, excellent question. Apple, for example, I'm not trying to get out of this as a scratch. I'm still bullish overall on Apple. And yes, they're taking some heat, but I think Apple, super solid company. It's in many people's portfolio for a reason. So here, Apple, I'll definitely get out of this one with the profit. I don't mind owning Apple right now. I think we will be fine. But again, that's my opinion. You might have a different opinion, which is okay. Right? This was, I don't want to say it was a bad trade. At the time, I'm standing behind my decision. But right now, this is a stock where I just want to get out at break even. Or maybe even at a small loss, right? Because this puppy, with everything that is going on, this could be another Nikola, right? Nikola also has been targeted by Hindenburg. And as you can see, what happened to Nikola after being targeted by Hindenburg, it's just hovering around there. So, I want to get out of this one. If I have solid value stocks or solid growth stocks like Apple, I'm fine holding them for a longer period and getting out of with a profit here. So it really depends. Great question, but it really depends on the stock. And there's a get out of it.
It's taking you for a ride so far, right?
Hell yeah, jeez.
All right. Well, you're working your way out of it. We've talked individual stocks here. Just any individual market thoughts, quad witch, any tricks of the trade you've picked up over your years of trading? Any do's or don'ts you want to share with us?
No, way many years ago when I was younger and day trading and I could take the heat of day trading, I loved the quadruple witching days because they were just super volatile, right? And this is where you have nice intraday trends. Because the last thing that you see usually on a quadruple witching day is a flat line that like you see on other days, like we had on Tuesday ahead of the Fed meeting, right? We just had a flat line in the market. But for day trading, great. Right now for the strategies that I'm trading, it doesn't really affect me.
All right, Markus Heitkoetter is the founder of Rockwell Trading. Trade what you see, not what you think. To learn more, go to rockwelltrading.com/Benzinga. The link is up on the screen. Markus, always a pleasure, especially on a Friday to wrap up the week. Thanks a lot. We'll talk to you again next Friday.
Yeah, hey, Markus, too, if you want to get rid of that lazy boyfriend on the couch, just put a lock on the refrigerator.
Joe knows all about that.
There we go.
Joe knows all about that.
Thanks, Markus.
Markus. All right. Jason Raznick is going to join us. He is in the middle of getting his COVID vaccine, I think. So he'll join us.
Really?
Yeah.
And he already had
doesn't
it?
even need.
That's
He's already
what-
had COVID. He's taking. I need a vaccine. Son,
That
he
doesn't
should give me
make
his
sense.
vaccine.
That's what I said, and he said that's what he said too. But apparently it doesn't.
It doesn't work that way.
Dennis, what are you seeing in imbalances out there?
They flipped. So we had them all buy again imbalances on a quadruple witch. We'll just keep bouncing around. It'll be all sells, all buys, all sells. You can't put a lot of weight into the early morning imbalances. Even in at 9:29, you're looking, and then they flip the last second because there's some institution sitting back, just waiting until the last second to come in. Okay, buy them all. So there's just so much institutional action that comes in balancing against open option positions on this day at the open and the close that it's very hard to give weight to it. But right now we have a lot of sell imbalances. That can change on a dime. There's some buys too, but if I just want to cherry pick a few for you, again, you can't give these any weight on this day. Normally you can, any other day, not on an option expiration Friday. Mm-hmm. So Chevron 300,000 to sell, Exxon Mobil 500,000 to sell, Macy's 450,000 to sell, General Electric 320,000 to sell. Going the other way, General Motors 300,000 to buy, Ford 1.3 million to buy. Stocks even like Southern SO, which isn't traded. I trade it all the time, but not one because people are bored with utility stocks. But I pair trade these things all the time. 185,000 sell. If Southern was to open way down, the way I play this. So you want to talk about how I play it? I basically say, just if it opens way down, I'm willing to buy it. If it opens way up, I'm willing to short it. So I'm not coming in here saying, oh yeah, there's a Southern sell and bounce. I'm going to go sell it here pre-market and try to buy it on the open, because what if it flips? So I'm doing the fade trade where I'll surround all these stocks, OPG style, opening only order, where stocks trading XYZ at 50. Maybe I'm willing to short at 50 and a half, willing to buy 49 and a half. It opens at 51, I'm going to be short. Opens at 49, I'm going to be long.
And the farther it opens from the fair value, the more shares you're going to get, right?
If I was to put multiple levels out there, I don't always do that too. Like because what if I miss a piece of news? I don't like to get like, boom, I have so much money in one stock. So there's a lot going on, and I do use algorithmic trading for this. So I don't like to get heavy unless I really feel like I got a big edge. If I was seeing S&Ps trading flat and everything's going to open up 1%, I'll load up that trade. I mean, that's a huge edge. Like I said, I'll enter a trade for a 0.1% edge. If I'm getting a 0.5% edge or a 1% edge, that's huge. So
real quick,
on these type of days, it can happen.
What's the most orders you've ever had filled like on a day like this?
Oh, I don't know. It ranges. It's typically like lately it's been like crickets. You think you're going to get a lot of stuff, and you're like right there, 30 seconds before the open, you're going to get a lot of stuff, and then it all flips. So sometimes it's 3, 4, or 5 positions. Sometimes it's 50. Yeah. I've been filled on 200 before. So you get 200 stocks on the open, and you're like, okay, now you got some work to do. And when I get filled on that many, if it was all one-sided, I would hedge immediately. So when you get filled on anything more than 25 or 30 stocks, and they're mostly S&P components, the one thing you just have to look at is your net dollar exposure at that point in time. I'm not looking at any individual position. The first thing I'm going to do is say, how much am I long overall, or how much am I short overall? I'm going to hedge it with SPY, or hedge it with Qs if it's all tech, or if it's all banks, maybe I'm using another vehicle there. But if you're getting 30, 40, 50 stocks filled on the open, I'm looking at my net dollar exposure. I got to get back to market neutral, because boom, I just got short of these stocks. Okay, well, I don't want the market. The market's going to try to correct. There's two factors happening. Like if the market's here, stocks open here, it's got to come in. So you want to get your hedge on as quickly as you can. Sometimes I'll even anticipate, I'm going to get filled on it and pre-hedge. But then you get filled, and you try to get as quickly as you can, hoping that it comes back in the line. I mean, the 500 stocks have to add up to the SPY.
To your value, right.
Yeah, so, if you've got them all opening here, and this rarely happens, but it can happen on some option expirations, I'm trying to make that gap. I'm not trying to necessarily, and I can make that gap in a number of ways. If I get filled on a whole bunch of shorts, and I don't hedge, and the market goes up, this can go up too, and then you would lose. So I'm trying to make the gap. So as soon as I'm getting filled on so much net exposure, I'm going to hedge myself out. I'm trying to make that difference, to bring it back in. That's basically.
You want to know what your call of the week was?
ETF arbitrage.
You want to know what your call of the week was?
What was it?
What? Yeah.
10.
What?
Penn Gaming.
I don't even remember what I said. Oh, for the S&P ad. Yeah.
You said, did you see
I
what that
said? I just said that just because a stock gets added to the S&P doesn't necessarily mean that it goes higher. And you could tell on the initial reaction that it did not want to go higher because, again, Tesla was a special animal. It was such a big component of the S&P. But if you're coming out of an index that you're a big component, you're going to become a little component. There can be a net selling effect to it.
Yep.
So, and that's what we saw with Penn. You know, Penn's come off with the market too, but I mean, Penn is down significantly from the S&P ad. So you can't just blindly buy stocks saying, oh yeah, it's getting added to the S&P, it's going to rip up 50%. Tesla was a special animal. That's not the case with Penn. So if you look Penn, straight down from the S&P ad. GNRC, basically straight down since the S&P ad. So you would think this just doesn't make any sense. It does make sense though, because they're coming from a bigger component and they're going to a little component. There's probably a net selling effect there. I don't have those numbers in front of me, but I'm just guesstimating it that there probably is. If you're still going to be a big component, it can be a different, NXPI might be a different story, but because it kept holding up. And then what was the other one? Penn. Oh, Caesars. CBR straight down since the S&P ad. So 3 out of the 4 S&P ads from 4 nights ago, straight down. You've got to understand those arbitrage effects. It's not necessarily a buying
people that aren't indexers, right? And they have Penn, they have a boatload of Penn, and they're like, oh man, I got a target at 130 here. I never thought I'd 135, 140. They don't care. They're getting their price. So you have those participants in the market that are, I mean, it's had a hell of a run, but that are, hey, wow, they're not indexing, they're not tied to doing anything. I want out of 135. I'm out of 135. So a couple different factors going into that. S&P's just hanging out, kind of quiet here. 39.15 in a quarter. You mentioned Tesla, and I know I was going to wait. Is Raz coming on?
I don't know, but there's also a headline this morning on Tesla.
What's the headline?
I guess the Chinese military is concerned about all the cameras and sensors and stuff, so they've banned Teslas on any military base, installation, complex, etc.
How many are there on their military base?
That's another question that I don't have the answer to.
Dennis, look at this Tesla chart here. I mean, is this thing looking tired at 700? I mean,
it failed right where you think it should fail.
Yeah,
this was textbook trading. I mean, you could do the 50%, go 900 down to ballpark at a 540. So what is that? 360. So it's takeaway. So 360, 180. Add on 180 to that, you get right to that whole 720. So it failed right around the 50% retracement. Textbook fail. Whole number psychological fail. It makes you think that there's still a lot of pain ahead for Tesla longs. But again, you've got one smaller thing going for it is the little double bottom from the last 2 days. So 651 and 652. This is just textbook technical trading. 651, 652. That's a little double bottom 2 days in a row there. That's a huge level. If it takes that out, I say no such thing as a triple bottom. It's a slippery slope down to 600. So if it holds 652, you still got a chance here. But that's where, right now, this was a textbook selling opportunity at 700.
Yeah, it gave you a couple different shots at it too. The 50% actually comes in. It's my lines aren't perfect, but right is 7.25. But good eye there on the double bottom there too as well. So just wanted to point out Tesla, and that's it. We got the S&Ps just hanging out, trying what to do with the imbalances. I talked about the support, the overnight low coincided with that low from yesterday, and there was also a low going back earlier in March at that level too. On March 13th.
We just puked. What just happened?
I don't know.
Now I'm pulling at Joel because we dropped 5 points.
I was going to say
6 points.
I don't know.
6 points about 6 seconds though.
Something happened. Let's go. Let's go,
relief
Spencer.
for banks.
All right. Yeah.
Something happened.
There is Leisman's breaking something right now on CNBC.
Something big.
It's time to cancel all orders.
Fed will not renew capital relief for banks. Okay. That's just breaking from CNBC.
All right, see, I'm on it.
Yeah. All right.
You caught me, Dennis.
I gotta go trade. Good luck trading. Remember option expiration.
Let's pull up those bank charts now. Holy moly. Let's go look at all of them.
All right, let me go to shorter term chart here. There Let's see here. 1 minute. Oh, now, wow. Just as we were talking about yesterday, that is totally messed up my scenario for the open. I wanted a higher open and a rally. What could still happen? Just spiked down to 96.50, back above yesterday's low. Right now, we're going to be looking at the close. There we are. We just ticked green, 06 even. Let's see what happens now. Where's mid-range on the session? I'll have to flip to my other chart here for 1 second. See where we got mid-range. That's going to be your bogey now. But good eye on that. We will catch the bank stocks. I mean, why do the banks need money? I mean, they just got rich on these the big moves that they had. Maybe they don't need any money anymore. But where did we go to here? Let me get the mid range for you. So we're not going. Raz is not going to come on today, or what's the deal?
I'm trying to get this headline because I'm trying to listen to you and also.
Okay, 39.10, folks. That's what we're looking back on the upside. Right, so, I just got that for you. We got to get back above 39.10.
The relief from the supplementary leverage ratio expires at the end of the quarter, and I don't think they're going to renew that. What else am I seeing here? God damn. Yeah, it will not extend the emergency that emergency program that made it cheaper for banks to hold cash and bonds. So okay.
Interesting move here on a Kyle Wick, but hey, buy the dip right there. We're back up. We're back green on the session. That's interesting news. Come out right at 9 o'clock. Mid range on the session, 39.10. Getting back, so we still got a chance for that early morning rally. Look at they hit JP Morgan yesterday. That was weak on the close. We'll be keeping an eye on the pre-market low. What did they do to Bank America? Bank America spiked down under 38.20. We got to 38.13. Didn't even get to yesterday's low, I bet. Let me see. We did get through yesterday's low. So keep an eye on that, folks. You did take out yesterday's low. The next daily low, and I don't know where Bank America is going today, but man, 3 lows flanking the 37 area. 3 lows between 697 and 722. But right now, pre-market low still, or yesterday's low still coming into play. XL left. It might have been a little slower to hit that. Let's take a look. That is spiked down. So right now, just another buy the dip so far. They didn't like being under 3,900 in the SPOOs. Right back here at mid range now.
All right. Thank you to the Benzinga Pro News Desk for getting this page up. This is from the Fed. This is a PR this is what was out. This is what they were talking about CNBC. This is what was out at 9 o'clock just now. I'll read to you if I can for just the Federal Reserve Board on Friday announced the temporary change to its supplementary leverage ratio, or SLR, for bank holding companies will expire as scheduled on March 31st. That's what I said a few moments ago. The board will shortly see comment on measures to adjust, yada, yada, yada. Okay, so they're letting this program expire. That's basically all the press release says. 3 paragraphs, but the first sentence is the important part. So back to the charts. That SPY, those algos are fast, man. Those machines are real fast.
Yeah, and they sold it off and they bought it up, and now the battleground at the close, 39.06 mid range. I mentioned mid range right there was at 39.10, and I think that last bump got us there. Just let me take a look. So looks like we got some extra fireworks heading into the quad witch expiration, and let me see.
Between the quad witch and the S&P rebalance is as if we needed more fireworks, but
yeah, 12.25 you got to. So almost back. We were right when Dennis caught it. We were at like around 39.15. So digesting the information. I guess we're no Raz today. So
I don't know. This is what he told me. He told me he was gonna call in soon. This is at 8:42. Oh, there he is. Jason, you made it through the vaccine. I was worried about you. Oh, Raz. Okay.
What?
Can you hear me?
Can you hear me?
Yeah.
Yeah. Hello?
Yeah, we got you.
Can you guys hear me or no?
Yes.
Right, cool. So I made it through, Spencer, but guess what happened?
What happened? I don't know what
I
happened.
forgot to call in.
I know. You told me you were going to call in. You forgot. It's okay.
I forgot. I was on the phone. You guys want to hear something pretty funny?
Yeah.
Is Joel here?
Yeah.
Yeah. Hey, what's up?
Hey, Joel. So my parents are in Florida, okay? All right? And I have a friend. You guys may know who he is. His name is Howard Linson.
Yep.
He he has a SPAC that's live in the market, StockTwits, bunch of other eToro, a bunch of other stuff. I set my parents up and him to go to dinner tonight at 6:15 in Florida. They don't know each other at all. How funny is that?
They're gonna have a blast. He's got a ton of personality.
Oh yeah, Brian. I don't think my parents have a clue what they're in for. My mom's gonna be like, I don't know what is going on, and my dad's gonna be like, what is Twitter? What's Twitter? What's
Joel, Jason, I want to know how the vaccine process went.
I'll get to 1 second. So Joel, I started to get a little nervous about this dinner. So I'm like, should I just drive to the airport right now and fly to Florida so I could be there? So I could make, and then I'm like, that's pretty dumb to do for an hour, dinner. So I'm not going. Vaccine process was good. I mean, the vaccine process was good. No issues. You go in, they have Pfizer, they have Moderna, and you walk to the room that you're supposed to be in, and then I went to Pfizer. And then
wait. I have a question. Was it like a menu? Can you like order? Like, can I get the Pfizer? Can I get the Johnson & Johnson? Can I get the Moderna? Was it like that? Oh, damn. I think I lost him. Damn it. I shouldn't have interrupted him.
Hello?
Yeah, I'm here. Okay.
You didn't lose me.
Where did you go to get that?
You lost me? All
No,
right,
Jason, we have you.
I went. Okay, I went to a facility. Okay.
Okay.
Can you hear me?
Yes.
Hold on. Are you guys there? All right,
Yeah, we're here,
guys.
guys.
More information.
Okay,
So
we're ready.
When you get your Pfizer shots, when you get your Pfizer shot, they ask you if you've been exposed, have you this, any of that stuff. And I said to the lady, we got to make this more efficient. You should just have a recording so you can just press the button and the recording plays. You know what I mean? And she's like, I would love that. I have to say the same thing over and over 600 times a day. That's my idea for them.
Okay.
All right, this interview.
Okay, so
you guys not hear me?
No, we hear you. We hear you.
Frozen,
You're a little quiet, but I've turned you up.
Hello? Is this better? No camera?
Yeah, it's a little better actually.
Is it better? Okay. So hey, are we up or down on the NASDAQ today?
Well, it's funny you ask.
Why?
It was a rather uneventful morning until a few moments ago. We are down. Oh, actually, no. In the NASDAQ, we're up. I stand corrected. In the NASDAQ, we're up. The futures are up.
All right. Because all I know is I interviewed Kevin O'Leary yesterday, and the market was up, and then it goes down in craziness, and I was up so much money during the afternoon, and I go to my account at the end of the day, and I lost more money than I make in a year. I don't know what happened.
Oh, I'm sorry, man.
Did you follow your plan in Tesla?
What?
Did you follow your plan in Tesla?
Yes. So I still have puts. I've less calls, and I sold a little more at 700 recently.
Good.
So I'm down to it used to be 48% of my portfolio, or 51%. It's now down, Joel, to 28%.
Then I'm going to sleep better at night.
Yeah, well, Joel's still high. The reason I was down so much yesterday was because that Tesla and my travel stocks are going down. I need my travel stocks up. I mean, I have some stocks, Joel, that I love. STKS. I love it, Joel. You know why? It's a steakhouse called STK. And when things are fun, that place is the best. So I just keep buying it. I don't know.
SPK? What?
It's ST like steak, like STKS.
STKS.
Jason's all in. Raz is all in on the restaurant plays, right?
Who do they own? I've never heard of it.
Yeah. I'm. Oh my God, Joel! If you want to have fun with me one night, we go to STK, and you'll think I'm the greatest guy ever created.
Jeez.
Where is there one around here?
No, Joel. Either to Vegas, to Toronto.
Vegas.
Maybe, yeah, there's one in Chicago, but I like the Vegas one. So, I mean, bless.
What's it called in
my,
Vegas?
My cousin David Rosen, 10 years ago. STK. Can I just tell the story?
Sure, go tell the story.
I'll turn the camera off. Okay,
all right.
So STK. Let me turn the camera off so it'll save the.
Yeah, we're good.
Turn it off now. What the heck? Anyways,
no.
If I go out, Spencer, just hang up on me, okay?
All right.
So STK, my cousin David, he was 54 years old. He passed what? Okay, he passed away of cancer, and he knew he was going to die, and so we went on a cousin trip to Vegas. We went to STK for dinner, and guess who I meet there? The Dallas Cowboys cheerleading team. I got the cheerleading team to come join our table for dinner for David. It was amazing. And so, I'm like, my cousin's here, this. And it's that STK, the Dallas Cowboy cheerleading team joined us. And here's the best part, Joel. They invited us to go to there's a club next to STK. I forget. It's the hottest club in Vegas. They invited us. They said, we have the whole top thing. You guys will just be our, the 10 people with us, whatever. My cousin David didn't want to do that. He just wanted to go play blackjack. So we went and played blackjack. We didn't go with the Dallas Cowboy into the club. How about that?
That's a good story. Very good story.
It's a good story, but it's awesome to go into the club. It's also, but also, Joel, also going into the club with the Dallas Cowboy cheerleaders could have been pretty fun in my opinion.
That might have been interesting.
All right, Raz, we'll let you go because it looks like you're almost at the office. So,
how do you know he's almost in the office?
Just saying.
I can tell by the background.
David, I love cousin David. Cousin David, I love you, but we could have gone into the place with Dallas Cowboys. All right, Zinger Nation, Benzinga, pre-market prep. Let's party it up. Let's have a good time. Let's make some money this week. We finish it off strong. Thank you. Sorry for being in the car, but I had to get that vaccine because Joel was worried about me.
All right, see you, Raz. All right, that was an interesting interview.
All right. We're going to wrap things up here on this Freaky Friday.
Yeah, Joel, we'll let you go. Everyone smash the like for Joel, for Dennis, for Jason, for Marcus. Joel, I'll talk to you again at 3:30. How about that?
All right, have a good one.
All right, see you, Joel. Hopefully it's a quiet day, but who can say on a quad witch and S&P rebalance Friday. All right, guys, pre-market prep is always available as a podcast. You can listen to it on Spotify, iTunes, SoundCloud, Stitcher, etc. Please remember all the information and content from this show is meant to be used as informational purposes, not for investing or trading advice.